financial statement analysis tools. If I continue with sharing my screen, here we are, and I think you can confirm this is where we left based on our previous class. And to continue, I gave you this as an assignment. You're supposed to look at it. If you did it, it is good and right. If you never did it, you are going to see how it is being done as comparative balance sheet as a financial tool is concerned. So based on our previous lesson, this one was our number one illustration, and this illustration goes: the following is the statement of financial position of Guta Limited for the financial year 2012-2013. Prepare the comparative balance sheet and study the financial position of the concern. So here we have assets, equity, and liabilities. Some of the assets we have land and building, 270,000 in 2012 and 170,000 in 2013. Plant and machineries, we have 400,000, 600,000 in 2012 and 2013 respectively. We have furniture, 20,000, 25,000, 2012, 2013 respectively. We have other fixed assets, cash and cash equivalent, bill receivable, sundry debtors, inventories, and prepayments. That is assets in 2012 and 2013 respectively. In equity and liability, 2012 and 2013 respectively, we have share capital 500,000, 700,000. We have revenue and other reserves 330 to 222. We have 8% debentures 200. We have 300,000 respectively. We have longer term bank loan 100,000, 150,000. We have bill payable 50, 45, sundry creditors 100, 120. We have accruals and provisions 500, 5,000, then 10,000. The total number of assets in 2012 is 128,000, 1,285,000. Then in 2013 we have 1,547,000. In equities and liability, the same. So how are we going to get comparative balance sheet analysis? As it was said, here we were comparing 2 years. As I said, we have previous years and current years. So we are going to analyze everything based on the 2 years, which is 2012 and 2013. So some of the solution we are going to do here is as follows. You find that comparative balance sheet or statement of financial position of Guta for the year ending 2013 and 2012 is as follows. So we have current assets. For now, I think everyone should know how to differentiate between assets and liabilities. So we are going to have current asset, non-current asset. We have current liability, non-current liability, and equities. We are going to compare them based on the 2 years, which is 2013 and 2012. The current year is 2013 and the previous year was 2012. So we have increase and decrease, and increase and decrease in percentage. So here we have increase and decrease in figures and increase and decrease in percentage. How will we do this? If you leave about this, if you come back up here of what comparative financial statement analysis was all about, this is what we will talk about here. The comparative balance sheet shows the different asset and liability of the firm on different dates to make comparison of balance sheet from one date to another. The comparative balance sheet has 2 columns. You can now see comparative balance sheet has 2 columns for the data of original balance sheet, and a third column is used to show change and increase in figures. The fourth column may be added to give percentage of increase or decrease. While interpreting comparative balance sheet, the interpreter is expected to study the following aspect. So comparative balance sheet is being divided here. So it is going to be divided in terms of columns, where the first and second column are the original assets in the balance sheet. The third column is used as a change of increase or decrease in figures. Then the third is going to show an increase or decrease in percentage. If you go down, you will find that what we big discuss here is what we have. And here it is. The first column shows the column for current assets, the details which were there. Then we have the third and fourth. The third column shows increase and decrease in what? In figures. Then the fourth shows in percentage. So here we have current assets and equivalent. The first one is cash and cash equivalent. Cash and cash equivalent in 2012 is 20,000 and in 2013 is 40,000. So 2013 is our current year, 2012 was our previous year. So here you are going to take, to know whether it is a decrease or an increase, you are going to take the current year, which is 2013 figures, minus the previous years, which is 20,000, and that is 2012. So you are just going to get the difference between the current year. As you can see, 2013 here is the so 2013 is the current year, 2012 is the previous year, and we have cash and cash equivalent, which is 20,000 in 2012, and 2013 we have 40,000. So you are going to get the difference. If you take 40,000 minus 20,000, you are going to get 20,000. That is an increase or decrease in figures. So here should be figures. This place, all of it should be in figures. Then we have bills receivable. We are going to take the current year's figure minus the current year's figure minus the previous year's figure. After getting the difference, you are going to know whether it is an increase or decrease. So for cash and cash equivalent, if you take 40,000 minus 20,000, it is 20,000. If you come to bills receivable, you take 80,000 minus 100,000, that is going to be a negative figure of 20,000, and here it is. If you come to sundry debtors, if you take 250,000 minus 200,000, it means in the current year, in 2013, 250,000 is more than 20,000, 200,000. So 250,000 minus 200,000 is 50,000. You are going to get that. So that is going to be how you are supposed to get an increase or decrease in comparative financial position. It is where you compare 2 years. In inventories, if you take 350,000 minus 20,000, 250,000, you are going to get 100,000. In prepayments, here in 2012 we don't have anything. So meaning in 2012 prepayment is 0. Then in 2013, which is our current year, is 2,000. So if you get the difference, you are going to get 2,000 as an increase. So in this column, we are going to have only bills receivable as a decreased figure. So how are we supposed to get either it is an increase or decrease? Most of the time, if you want to compare this, you take 2013 is the current year, previous year is 2012, divide by the previous year. So you are going to take, if you want to get the percentage increase in this figure, you are going to take 2013 minus 2012 Then everything divided by a figure in 2012. A good example, if you take 40,000 minus 20,000 divided by 20,000 times 100, which is the percentage. So let's work out that you can take 40,000 minus 20,000, that will give you 20,000. 20,000 divided by 20,000, which is 1, times 100, you are going to get 100%. And here we have 100%. Another thing, take the current year's figure in bills receivable, 80,000 minus 100,000. Everything divided by 100,000 times 100, you are going to get negative 20%. Another figure you can also take, or if you don't want to do the repetition of figures, just come in decrease or decrease, then divide them by the previous year's figure. Like you take 20,000 divided by 20,000 times 100. Take 20,000, negative 20,000 divided by 100,000 times 100, you get negative 20%. Then you can come here, take 100,000 divide by 250,000, you're going to get 40%. So if you sum up all the current asset, you are going to get 26.7% as an increase, because it is a positive figure. If you come to non-current asset, you do the same. Land and building, we have plant and machineries, furniture, and other fixed asset. So you are going to get the current here minus the previous year divided by the previous year times 100%. If you take 170,000 minus 270,000, you are going to get negative 100. The negative 100,000 divided by 270,000, you are going to get, then you multiply by 100, you are going to get negative 37%.